Welcome to another episode of Mutual Growth, a podcast by Penn Community Bank. I'm your host, Aaron Clark. After the show is over, be sure to check out the show notes and links to resources at penncommunitybank.com/podcast.
All right, Peter Palumbo, welcome to the show.
Thanks, Aaron.
Appreciate you having on. Happy New Year to you and to all our listeners. We're glad that everyone's joining us today. We have a lot to talk about. Pete's the expert here in the real estate market and housing lending. We also want to talk about our home opportunity mortgage. So a lot to get through. But Peter, why don't you start us off at the very beginning? Can you introduce yourself and what you do at the bank?
My name is Peter Palumbo. I'm a mortgage loan officer at Penn Community Bank. I got started in lending way back in 2006, about 17 years ago, and even went through the implosion in the market, which wasn't a whole lot of fun. But and I got into lending because I just liked everything about houses. I liked fixing up houses. I liked buying them, renovating them, and finally I was interested in what the ratios that the banks use in order to qualify myself and other people for money that they may want to borrow in order to further invest in other properties. So that's how I got into the banking side of things and became a mortgage loan officer back then, which I found was very enjoyable because here I'm making people happy, helping to put them in new homes, and I like the people aspect of it. You know, talking to people on a regular basis, trying to help them out, and making long-term relationships that way.
Yeah, you must really like it if you were willing to slog through 2008 and trying to finance and sell houses during that period. So we're certainly glad to have you aboard. Kind of on that note, you know, it's a bit of a challenging time right now for home buyers, especially first-time home buyers that are kind of in the market. They've been maybe looking for almost, a year, 2 years maybe. What's your view of the market and the lending environment for that matter, with rates and everything?
Well, the problem right now is inventory. There's still not enough homes that are on the market, and so some people have been searching for a while. And, let's take December, for example. 30% of the homes that were purchased in December were cash buyers. So people that traditionally, they may be boomers who they have a large home, they want to downsize a little bit, take the money, and they're not necessarily interested in having a higher interest rate. If they have a mortgage now, and they downsize, they may end up paying the same amount of money having been downsized. So people are looking, because there's not enough houses on the market. That's why it's a little difficult especially for new home buyers with the interest rates going up. The interest rates hit the highest in October of 2023 since 2007. And now, since then, in the last couple of months, they've stabilized. They've come down a little bit and stabilized. But it's unless they come down a little further, we're probably still going to have this problem with with inventory. And so it may be slow going through 2024, but we don't know. It's an election year. That could make a difference. The Feds could end up cutting the rates again, lowering the interest rate, in which case that would create more inventory out there on the market and could change things. So a lot of uncertainty right now.
It seems to be cut that. Yeah, uncertainty seems to be the name of the game. We've talked about that with a number of other guests, going back to Dorothy Jaworski and kind of her economic outlook, from where she sat as the bank's treasurer. So we're trying, as a financial institution, certainly you've mentioned, kind of your work with your customers, even during the holidays, trying to put a face with a name, kind of build relationships, help make a difficult or uncertain situation a little bit more certain or a little easier. One of the products that the bank launched last year, and I know you've been deeply involved with, is the Home Opportunity Mortgage Program. Can you just give us kind of a snapshot of what that program is, what the product is, and kind of who it's for?
Well, as a community bank, Penn Community, we want to help. We want to be involved in the community. That's why sometimes the bank will even shut down for a whole afternoon and go out. Individually, we'll go out and help nonprofit organizations and reach out to them, which makes us a little different from a lot of banks. Since then, we've expanded into Lehigh County. We're now in Montgomery County. We're expanding into and doing work in Philadelphia County. And so this program came about after outreach with community leaders, especially minority communities, to better understand what the barriers might be to home ownership specific to that community. Philadelphia is one of the areas that I have been concentrating in. There's a lot of different areas. There's so many different neighborhoods, so many, you could sometimes buy a house for $100,000 or on up in Philadelphia still. And so there's number one, we want to help the community, especially the minority areas, because with home ownership, it's better for there to be home ownership as opposed to investors coming in and possibly doing low income housing there, and which would then change the neighborhood there, and also helping the customer who is in a position where they want to buy a house, but it's difficult for them. They may not have enough money to be able to purchase a home for various reasons. Some of the reasons would be, when some people are growing up, they don't know about credit. They don't know how credit works. Maybe they weren't taught. Maybe nobody guided them through that process. So sometimes they have bumps in the road there with their credit, which can then last for years and years and years and affect them from buying a home. Also, some of the people, our clients, they have good jobs, steady jobs, are working hard, but it's difficult for them to possibly save $25,000, $30,000 because maybe they're single, they maybe a parent of one or two children, and they're making $50,000 a year, for example. It's difficult for them to save the amount of money. So, when you talk to people and there's generational wealth that we want to help people out with. So if a person grows up and no one in their immediate family owns a home, then in their mind, well, I guess you grow up and you rent, or you live with other family members and they're renting, and so your mindset, you're not really looking at being a homeowner because that's what you understand, and so that's one of the things that we're trying to change. So the other thing about the program is the importance of focusing on non-traditional qualification criteria. So that would be, instead of looking at the person's credit score, which may have whatever they did several years ago may have affected them at this time, but we're going to look at their credit history. Okay, so you had some bumps in the road in the past. How have you been doing for the past year? Are you on track? Okay. And because maybe they work through some of those difficulties, they're on track, but yet that score is going to follow them for years and years. The other thing that we're looking for is that they would have at least 3 months of principal, interest, taxes, and insurance in the bank. Okay, we want them to have that as a buffer, not to use towards the loan, but as a buffer, just in case the roof went, the water heater went, the septic system went, that they would have a buffer so that they don't have to worry about, okay, where's my next meal going to come from? Or do I fix the problem? Do I pay my mortgage? What do I do? We're setting them up for success, not for failure. It wouldn't be fair for us to help them into a home and then they have nothing, no backup, no buffer financially there. The other problem is that okay, so they have that, say they have the buffer money in there, and then the other issue is closing costs. How are they going to pay closing costs? Closing costs could be $10,000, $12,000, $15,000. Well, what we do, I'm going to help them, guide them through the grant process to see possibly if we can get them maybe $10,000, $12,000, $15,000 in grant money. So this way that could help pay for the closing costs. With one of the, I've had a lot of success doing that, guiding them through the process. I don't qualify them. I gather all the information, try to guide them through the process. When their file looks like it has all the details in it, I send it off to underwriting, and underwriting looks at it and says, okay, this person can now be pre-qualified. And then we send them a pre-qualification letter.
Yeah, like you've kind of pointed out, it's a product that really seeks to try and go kind of line by line. Hey, what are these pain points that we've heard through these active listening sessions with clients that have tried to go through the process and maybe been stymied, or those nonprofits or community leaders, like you pointed out, zero down payment options, whether it's reduced closing costs, the grants, or homeownership, kind of financial literacy education, credit requirements, PMI, all those kind of aspects, and really trying to diagnose some of these systemic issues in the community. So, we've put all these pieces together. You've been out working with clients. It's been in the field, going on a year now. What has been your experience with the product, with explaining it to communities, and to really beginning people on maybe a home buying journey they didn't think that they were able to access?
Well, I think the easiest way is to work through a realtor, because when someone wants to purchase a home, they're going to go to a realtor first. And one of the realtors that I've been working with in the Philadelphia area, I participate in a home buying seminar once a month on a Saturday. Go in there, and there's usually 15, 20 people that they want to know, how do I buy a home? And so there's the real estate agency sponsors. Well, actually, we sponsor it. We put it in conjunction with them, give them a lot of information, answer all their questions about home buying, the importance of their credit report and saving some money, and all the details. And also, they're given information about the grant programs, which could help them out. So this way, when by the time the person comes to me, so we're doing a group session, then they meet with the realtors individually. By the time they come to me, they're somewhat qualified. Okay, it's a lot easier than to do that in a group session, going through a realtor, having them pre-qualified, rather than doing, say, 20 people individually on the phone that may or may not qualify. And so it's easier in a group session. But if someone comes to me individually and they want to know more about this program, they don't have a realtor that they're working with, I'll work with them also.
So we've kind of worked the clients, the potential home buyers through the process. They've gotten to Peter Palumbo's desk. They're qualified. They're going to work through the process. kind of take us through what that process looks like, and more importantly, what are the outcomes? What are these successes that you're able to see at the end of this process?
Well, once I get I put the file together and send it off to underwriting to review, and underwriting says, okay, this person can receive a pre-qualification letter. I issue that, the realtor gets a copy, they get a copy, and I give them an idea how much home that they could purchase. Now, I have to, because taxes can vary greatly from one part of the city to another part of the city. It could be $400 a month on one side and $89 a month in a different neighborhood. I have to give the realtor an idea. Here is the maximum number for principal, interest, taxes, and insurance. Please do not go over this number. So it gives them an idea. It gives the customer an idea how much home that they could purchase. It gives the realtor an idea where that they could possibly find a home, calculate the taxes, calculate the insurance, and then we work on it, on a one-to-one basis. It's, because the interest rates can change in this, which would then change all the numbers. So sometimes the realtor will call me and say, okay, would they qualify for this property or not? And we've had I've had a lot of success with it. Out of approximately 80 referrals, I had 30 pre-qualifications, and so far 14 closings in the last half of 2023. So, and it was a lot of closings to attend, but a lot of happy faces. And when you're talking about generational wealth, and you have sometimes you might have a grandmother, a granddaughter, daughter there, and they're all thrilled. And you asked, instead of asking the daughter, well, what did you learn in the process? And daughter saying, well, instead of them saying, well, I don't know if I could ever buy a house because no one in my family has ever owned a home. Now you have people saying, oh, I can't wait to buy a home. I had another daughter say, well, I not only want to buy, I want to buy and sell and fix up. I want to do this, I want to do that. Well, now we're creating an entrepreneur, not just a future home buyer. So, when you're sitting at the table and you're seeing tears, I get hugs, and it's just a really, really awesome experience to bring that happiness as a community bank, to extend it out to the community, to individuals, and we're changing lives, and we're helping to build generational wealth for these individuals. We're helping to change the communities themselves, because home ownership is better than someone renting that house out. They're going to take care of that home. And so I'm proud to be a part of that experience there. It's and for the customer, well, it's achieving a lifeline goal, building confidence in them, putting them on track for building generational wealth, and so many other things. And I always follow up with a phone call, and about a month later, oh, how's it going, and how's it feel being in your home? And they're just thrilled about it, because they never thought it was going to be possible.
No, it's got to be impactful to kind of see the process through like that, and then, as you said, kind of a month in or after that closing date is done, and the reality is kind of setting in, to be able to kind of circle back.
Yeah, and the program, there's many advantages to it. Like you had mentioned before, there's no PMI in the program, and we're not going to look at credit scores. We're going to look at credit history. It's breaking all the traditional qualifications to home ownership. The barriers that were discussed with the community leaders, here are the barriers that they're having, and we're overcoming these barriers. And this is a conventional loan. It's not It's not an FHA. It's not unconventional. This is conventional. This is a portfolio loan that Penn Community will be holding. And so we want to lay out the groundwork for these people, and perhaps they'll become not just happy customers, homeowners, but they'll be customers of ours, and we can help them down, with their savings plans and future goals with purchasing cars and helping their family out.
Yeah, it's certainly all connected. Peter, just one last thing, because I know when we had talked, late last year and discussed the program and how it was going, one of the things that you mentioned was kind of the pride that you felt of being someone with connections to the city of Philadelphia and being able to see this product making an impact in some of those communities. Can you just talk about that or share what that experience has been like?
Well, I was born and raised in Philadelphia, and I've seen many changes in Philadelphia over the years. There's many neighborhoods. This neighborhood's prospering. This neighborhood's has potential, and to watch those neighborhoods over the years has been pretty interesting. So it helps me to relate to people who are potential home buyers to say, hey, you know what? I grew up in Philadelphia. My mother still lives in Philadelphia, and so I think it helps them feel a little more at ease that he understands to a certain extent. So, but that's my experience with Philadelphia.
Well, Peter, we appreciate you taking some time today to talk about your experience, both with the Home Opportunity Mortgage and also kind of your home lending journey here with the bank. We're thrilled to have you on board. Where can people who maybe are listening and are interested in learning more, where can they find out more about this program or any of our lending options?
Well, they could call our main number at 215-504-6590. That number again is 215-504-6590, and ask for a loan officer to speak to a loan officer about the Home Opportunity Mortgage Program. If they want to reach me, my extension is 5309.
Gotcha. All right. We'll put that in the show notes, as well as penncommunitybank.com/home opportunity mortgage for all the details about the program. Once again, Peter Palumbo, thanks so much for hopping on with us today.
Thanks, Aaron. I appreciate your time.
I hope you've enjoyed this episode of Mutual Growth, a podcast by Penn Community Bank. Be sure to subscribe and leave us a rating. And as always, keep up with the latest from Penn Community Bank by following us on Instagram, Facebook, and LinkedIn. For more information about this podcast, links to past episodes, or to learn more about Community First Banking, just visit penncommunitybank.com/podcast.
Mutual Growth is the official podcast of Penn Community Bank, member FDIC, equal housing lender. It is produced for the benefit of current and prospective customers and partner organizations. This program is provided solely for educational and entertainment purposes. The information contained herein is based on sources believed to be reliable, but is not represented to be complete, and its accuracy is not guaranteed. The opinions, views, and estimates expressed are those of the presenters at the date of production and are subject to change without notice. Please email marketing@penncommunitybank.com regarding booking or repurposing any part of this podcast.